And good afternoon. Welcome into Market Talk here on this Monday, May 23rd. Thank you for joining us and making us part of your day once again. I am your host, Jesse Allen. Find us on all your favorite radio affiliates as well as all of our streaming sources that we are on: Spotify, Apple Podcasts, iHeartRadio, and more. All that can be found online at markettalkag.com. Well, we saw the wheat market rebound after a rough week last week. Corn market was firm today. Soy complex under some pressure, and we saw plenty of green on the screen in the livestock trade today. Let's bring in our good friend John Heinberg with Total Farm Marketing on this Monday afternoon. John, good afternoon to you, sir. And interesting Monday coming back here from what was a tough week last week of the wheat market, but we were able to rally there, and corn was firm. I think overall, not a bad day, but definitely a few storylines to watch out for.
Yeah, well, I mean, solid day in that wheat market. It was good to see it kind of hold those gains on the overnight session, and maybe we just seen a little bit of a profit-taking move after a pretty rough week last week. We had that big run out last Monday, and then gave it all back plus a few pennies. So maybe we saw some squaring up today as we're looking towards those crop ratings here this afternoon, and we'll see where the planting pace is on that spring wheat crop, as well as the conditions of that winter wheat crop down in the south. And so that's probably some of it there. And that may have been some of the same factors that were in both corn and soybean markets today. You had a soybean market that was red hot last night and looking strong, and gave all that back, and then it fit double digits lower in the old crop side, which was a little surprising. Kind of had our head scratching a little bit on that today. We'll talking a little bit more maybe what happened there. And then corn, nice solid day today, again coming off some of the lows and just holding on to some support today. I'd like to see to get maybe a few more pennies out of it, get it back above some barriers and maybe open things up. But again, nobody wants to push it too far with those planting progress numbers and things like that coming this afternoon.
Well, let's stay on the soybean train a little bit here, and I'll wrap corn in with this just a little bit to frame it. But it felt like last week we saw some spreading of soybeans against corn, and then maybe here today we kind of flipped that around a little bit. Felt like there was some spreading of corn against soybeans today. But you mentioned that old crop. I was surprised, especially with a soybean sale to Egypt this morning, that old crop was down double digits in beans today, with new crop holding relatively firm. What do you think happened in the soy complex today?
And there's a couple different things that may be coming into play here. Again, first off, maybe some profit taking. I mean, we've had a nice run in that old crop bean market, so we saw some of those spreads unwind, old versus new. Today, obviously, with being 18 down in July, 13 down in the August contracts, excuse me, versus November. We also did late last night too. In the middle of the night, it kind of came a little more talk in the morning, and President Biden is overseas in Japan and South Korea, and the reporter basically asked him, if China invaded Taiwan, what would we do? And he said we would take military action against that. And I think that spooked the market. I really do. Obviously, it didn't make the Chinese very happy in that regard. So, so maybe that brought a little bit of risk off. It doesn't take much in this environment to get things to move around. Obviously, a lot of different, even the White House started backing off those comments early this morning, basically saying that Taiwan policy has not changed, and maybe not being so firm in their comments. So I don't know if that was some of it. We did have that sale to Egypt today. It's nice seeing some of the non-typical buyers jumping into that old crop bean market. Again, just tells you what's going on in that regard, and maybe those lack of supplies coming out of Brazil. And then just still continued chatter that China is in the market looking for beans for delivery in August, where we still have the best value going forward. As of the last weekly export sales numbers on beans, we're over the USDA target. Now it's a matter of us getting those beans shipped, but more than likely, we'll probably see another 50 to 75 million bushel movement on the demand side. That'll tighten up that old crop carryout. So, so today was a little surprising, but like I said, with those, planting pace numbers and things like that coming this afternoon, maybe the market just felt like it wanted to take a little risk off, and we'll see those numbers hit this afternoon at 3:00 Central Time.
I wonder as well, another thought I have with this soy complex, John, as we think about exports, and you mentioned the China Taiwan issue there a little bit, but obviously looking at the planting pace, a lot of the soybeans in the northern plains go out of the PNW to China. One has to wonder if, traders are maybe looking at just the planting delays there continuing and worried that we might not get some of those soybeans shipped out of the PNW here as we work through into the new crop, John.
Yeah, that'll be the big focus of that planting progress report this afternoon. We're expecting soybeans to get up to 49% planted. That's significantly behind the 5-year average in that regard. Same thing with corn, maybe getting to 68% is what the analyst expectations are. So another, 19% jump over last week. But still, again, we're looking 5-year average here about 85% or about 80%, excuse me. So still well behind. That's going to be the focus in the market because of the wet weather last week and the cold temperatures that came through some of those areas. And what's going to be the progress there? There was a lot of acres going into play in that regard, especially in soybeans. So, I'll be watching that very exclusively in terms of those North Dakota acres, as well as what's going on in the eastern side, central Indiana and over to the east into Ohio. That's an area from talking to clients there too. It's been very, very difficult to get going, and they continue to stay on the wetter side of things and really get some good progress in. So, we're going to get an improvement numbers across the board today for corn and beans on acreage wise, but we're still going to be well behind pace here. And that might make the market a little bit skittish going into tomorrow.
And I know there's some freeze warnings out for North Dakota and northern Minnesota here tonight, and that's going to continue to slow drying efforts in the northern plains. Let's talk a little more on corn. Weekly export inspections, were pretty good for corn. Soybeans a little more routine, but we saw those corn export inspection numbers higher. I've heard some rumors that Argentina may be raising export taxes soon, so I feel like some of those things maybe helped out the corn market here a little bit today as well.
Yeah, those little things came into play. That's why I was also surprised we saw the move in beans too, because of those same export taxes and that tied to the soybean meal market, which really lifted beans last week. But going back to the corn thoughts, again, we'll watch that planting pace today and we'll see where things go there. Again, we're a little bit maybe oversold here in this window, so trying to turn the charts back around. Feels like corn's trying to get range bound here. Maybe we're at the bottom of that range now. Maybe July needs to work $7.75 to $8 range here. The other side of it I'm still watching very closely is the cash market. You're hearing very good basis levels out there. And, I have a hard time watching the corn market fall apart last week when I'm hearing people getting 35, 40, 30 over in key corn producing areas. So that just tells you there's still some demand out there, and those bushels probably aren't available, especially with guys pushing in the fields like they are. So, it feels like we got some natural support on this corn market. Obviously, we're in a window. Maybe things can break apart a little bit more. There's a lot of money floating around out there. We all got a breather today because the stock market was at least calm and higher today instead of falling apart. So that was helpful side of it as well. So, corn market, we need to see that demand again, like beans. We got a lot of sales on the books. We got almost record sales on the books for next year already too. So that shipping pace is going to be key. And it was good to see those numbers come up today on that export shipment number, because corn was kind of lagging a little bit here the last couple of weeks.
You mentioned cash numbers, and I want to maybe hit on that just a little bit. Get your thoughts. If I'm a farmer right now in the midst of planting season, but maybe I still have some old crop supplies of corn or beans in the bin, or I look at that. I mean, am I looking to maybe clean out that bin here just with some of the great basis that's out there, especially in the corn market, John?
I think you got a great opportunity here to look at those things. First off, I kind of sent out to all my clients today and seasonality. Now I'm going to focus a little bit more on December when I say this, but it ties to all the grain markets, or at least to the corn markets in general. Typically on the multi-year historical charts around that 10th of June is when we kind of put the high in. And so between now and Father's Day, I've been kind of telling people take advantage of these strengths and prices that are there. And if they're giving you that type of a basis over, that's a heck of a sale. And probably rewarded here. You can always come back with some type of ownership strategy if the weather does fall apart. But, we got our next USDA report on June 10th. It all kind of falls in that same window. So basically, as I kind of said to my clients today, keep this in mind when we're thinking about cash sales here for both old and new, as well as making sure we're managing risk up into that date. Again, I'd rather be wrong with puts going worthless and watch the market go higher than try to figure out what happens if we lose 65, 70 cents on just a technical rollover just because of the calendar.
Now, on the flip side of this, I want to ask the thought here. What if some growers maybe priced out some new crop contracts that are facing more prevent plant? Maybe say they got sold 10, 15%, and they're really worried about getting corn in the ground with final planting dates coming close. I mean, what are my options if I'm in that scenario right now where I maybe priced out some futures contracts and worried about actually getting that fulfilled?
How can you protect your upside? And, you're basically at that level. Some of these elevators might be able to work with them, but those situations are there. Maybe it's something you get moved into the following production year or something along those lines. But make sure you got a ceiling in place. So if prices do take off because of some weather, you got that protected. And, then you got to go from there. Those are difficult situations. And again, it comes down to you and your elevator and what they want to work with you on. But for sure, make sure that ceiling's in place and the upside's protected. So that way, at least if we're at we do have a weather issue and we do run out here and you don't have the bushels, you're not, hung out to dry even more so on those prices. So that's going to be a key thing we got to watch. And again, when I talk about cash sales, that's one thing I always tell people too, is just, you got to sell to a level that you're comfortable. And if you're concerned about your crop and your production forecast, then you need to find a different tool. That's usually going to wind up being a put strategy or using a hedge and just taking that on itself.
Let's go back to the wheat market here just real briefly. Again, a good day there. Obviously, a lot of storylines. We hit on a few of them already. I'm hearing some chatter that we could see some spring wheat acres go in the northern plains versus corn, even if it's late, just to get something in the ground with the price levels that are there. Wondering if you're hearing the same. And also, second part to this, with the big drop in wheat last week and now kind of coming back, I wonder if maybe we've found a floor and maybe we're going to try to trade a range here for a little bit, barring any fresh news.
It does kind of feel like that in multiple grains. We were kind of getting into a range bound. Let's see where we are in a couple months type mentality. Corn's looking that way. Beans been that way for a couple months here now. And maybe now this wheat market after this latest news and, kind of the luster of the India export ban kind of wore off really quickly as we realized maybe it didn't have the teeth that we thought it would. We're watching that spring wheat planting pace today. We're looking at 56% as the target. That's up 17% from last week, but 5-year average is 83. So again, we're going to be significantly behind. Then obviously too with that wheat, what's going on in that KC winter wheat situation down there. Again, we're talking crop ratings maybe going up a percentage point with some moisture that came through to 28%, good to excellent. But any moisture they're getting now for some of those regions after looking at the wheat tour, probably too little, too late, unfortunately. And then also what's going to be left for abandonment. So getting back to kind of your main point, producers are going to do what they need to do in that area. I've heard both stories too. Where can we squeeze in beans? Where can we move corn to? Some guys are very concerned because they got the nitrogen on the field. So how are they going to handle that? Get that used up? Maybe that's where some of that wheat comes in too to help burn some of that up so they can plant beans on it next year. So there's a lot of working parts here, and that's going to be all in that June 30th planting intentions report that comes out, or that planted acreage report. Again, the one we see in March is probably one of the poorest reports the USDA does because it's so speculative, not a lot of responses, and those things will change so dramatically before we get to the end of this planting season.
Let's talk livestock, John. Cattle market first. We had that cattle on feed report Friday. We kind of went back and forth today, ended up mostly in the green in live cattle and feeder cattle trade. What's your thoughts on Friday's on feed report and just the action we saw in the cattle market today?
Obviously the numbers came in heavier than we thought, but at the same time, market handled them pretty nicely today. Probably a lot of negative news is priced in with that rough week last week and, the downside pressure we saw across the cattle market. So, the numbers don't lie. We got a lot of cattle in front of us here right in this window. Obviously, the pasture conditions continue to be an issue. You go look at the latest drought monitor situation. 54% of cattle country is experiencing some form of drought. That's been a factor in these placements. It's been a factor in terms of the cattle in the lots. Number one, they don't have the pasture there, so they're pulling these cattle forward to get them into a feedlot because they don't have the place for them out in pastures. And number two, because of the high feed costs, we're seeing a large amount of heifers move into the lot because they're not keeping around as replacements. The cattle market still looks very friendly to me long term. Okay, where you still got some animals to work through, and that's going to take us a handful of months to do that because of these high placements and just the concerns regarding recession. It sure feels like we're setting ourselves up here for a pretty big scenario in terms of tight supplies. Cattle pace and slaughter, or cow slaughter pace in the first quarter is decades old in terms of the number of animals we're moving. Okay, we're moving animals out quickly, and that's going to affect that 2022, then 2023 calf crops, which is going to really tighten up these cattle supplies down the road. So maybe today's move is nice to see a market rally kind of off of negative news. Kind of tells you that we could be at a low. Seasonally, the cattle market likes to put a spring low in this May to June window, and then move it higher into the summer and then fall back to a fall low. So today I was moving some defensive positions around, taking some money off the table, and just kind of counting on this market to hold this area, and plus we climb higher. and reward the producer there, at least in terms of cattle prices. So we'll have to get some follow through. Obviously, one day doesn't make a rally, but it was encouraging to see some of those reversals on those front month charts today. Now we'll have to watch how cash trade and things like that develop over the next couple of weeks.
Yeah, cash trade should be interesting. I think last week almost half was placed for deferred delivery, so be watching that closely moving into this week and beyond. Hog market, pigs are flying again, John. This market looking strong here on Monday. I know cutouts are helping support. What's your thoughts on the hog market?
That's kind of the same scenario now. We're maybe seeing some of those numbers starting to tighten up in the hog market again. You continue to hear about the impact of PRRS over the winter and into the spring, and empty barns being out there. Obviously, high feed costs keeping the farrowing intentions down. We saw the cash market and the retail market over the last handful of weeks really kind of fall apart. But then last week we got footing. It just seemed like the retail values got under the dollar level for pork carcasses, and the buyers stepped in. We rallied nicely last week. Now, same thing on the cash market. We really saw some good movement on cash last week. Maybe just again reflecting tighter supplies that are out there, as well as lighter carcass weights coming through. So it's tightening up the pork picture a little bit. So we're getting a pretty good price recovery. We're getting back to some levels now. Maybe we got some resistance. 50% retracement of the sell-off type moves. So we'll have to see if this has got some legs beyond that point. But boy, right now the funds got short this market or pushed it hard down to the lower end. Realize now that the money's got to flow back the other way. So that's a big factor in this as well, is just the movement of the money in this case. So, same thing with cattle. They push those two markets pretty aggressively. So maybe now, despite fundamentals or despite the grain market, maybe we'll see some money flow into both cattle and hogs here and continue a little bit of an upward trend.
Dairy market, John, looked like a relatively quiet day here on Monday. What's your thoughts there?
Again, very quiet overall. Again, just still watching these charts. We got this range we're building. Again, talking about range bound trade. $25 on the top, $23.50 on the bottom. We got some points that kind of look like the dairy market looks a little tired in these front month contracts. But, milk production came out last week. We saw a 9% or 0.9% drop in production last month. Cow numbers finally maybe stabilizing a little bit, but still down significantly from last year at this time frame. So the production is tightened up. The demand continues to stay good, and that's going to keep this market relatively supported in here. But just keep an eye on what happens with those cheese prices. They've been holding in very nicely, $2.30, $2.40 a pound. If those start breaking again, you're going to quickly see this milk market take some money to the sidelines. But at least now for producers, I think you got a range you can work with here and make sure you continue to build that defense longer term.
We didn't touch on the stock market really, but a decent rally there today. Energy's fairly quiet. Any thoughts there or any other final thoughts you have for us today, John?
We got a lot of volatility in that market too. Last week on Thursday and Friday, just how that market traded and how aggressively the week sold off. I don't think we're out of the woods yet by any stretch of the imagination. And rallies in this window probably need to be a little bit more treated on the bearish side. Are they just dead cat bounces or just quick price recoveries? So, really nothing's changed on the news front. So that, keeps me concerned that we could see the stock market continue to be on the choppy side, especially if we got a little bit more room to work lower now that we kind of poked into bear market territory here on a couple of these markets. So that's still something that's I kind of check every minute, because as we saw in the past, as I think starts pulling over, you see money flowing out, either protect margins or just take risk off or whatever they need to do. And we're seeing money leave the corn market. We saw it leave the wheat market last week, in that situation. So that's still going to be something that's out there. That's going to be something we got to keep an eye on, because it's not going to go away anytime soon. I think it's going to be a pretty volatile summer, at least in the first part of the summer here in that equity market.
A lot of moving parts going on in the market trade right now across the board. We're keeping our eyes on it. John, I know if producers need some advice, need a little help with their marketing, they can reach out to you there at Total Farm Marketing very easily. How can they do that?
Sure, Jesse, I'd love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. And again, our website is still out there for our producers, totalfarmmarketing.com. Feel free to check out the information there. As I kind of keep saying, knowledge is power, especially in these volatile times. Don't be afraid to pick up the phone and ask questions.
John, appreciate the time as always. Thanks for joining us on this Monday. Have a great week. We'll talk to you next week.
Sounds good. Have a good week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.